All right, guys, welcome back. It's been a while, and today I'm doing a breakdown or a study of a live trade or a particular trade example that I was taking sometime during the week. And I promised that I was going to break this down, and I got some questions about this, and here it is because it looked strange. It was not within the time zone or the time that I'm known to operate. And the question is, why did you take a trade like this? This was a 1 to 20, or just about that, about 1 to 20 uh, trade, or 1 to 20 hour. It had a high hour multiple of 20 to 1, and basically this was the entry. So basically what I'm doing here is showing you the entry, and there were more entries along the way, or there was one more entry along the way. And what I'm going to be doing here is breaking that uh, to you, and the reason for that entry, and how that came about. And basically that came on because of what I call intention, market intention. So in order for us to do this, I'm going to have to go back to a higher time frame, and we're going to start from there to look at what really happened, or uh, why I took a trade at that time. And that was actually a limit order, and it got triggered. It got triggered during, towards the end of London, or towards the end of the Asian session, breaking into London. And in order for us to understand what happened there, and that entry that we just saw, that led to a 1 to 20 hour multiple, we must start from a higher time frame, and we must start to look at price. And if you have been following the analysis that I've been doing over the last 3 weeks, you realize that I've been focusing on the euro dollar, and I've been talking about this particular pair and telling you that it would continue to trade higher. And I had areas that I was going to look for, or that I was looking at in terms of a target, the long term. And if you haven't watched the video, I would like you to go back and watch it. I'm going to try to keep this as short as I can and not bore you. Okay, now let's start from here, and let's look at how was I able to get that trade, or how was I able to identify a trade at that particular level. You would realize, or you would remember, that I talked about this area. Price breached that area violently. That happened. Price came back, traded into this area right here. We have, that's an area for interest. Trades into that area slightly, or it was a little bit shy, and it traded higher. And it did so violently, it broke this interest area that we were looking for reaction downwards. And that was intention. Basically, strong moves with velocity. These are the moves that point to intention of the marketplace, especially when you see that on a higher time frame. It points to intention. Now, when you understand intention, the next thing you're going to be looking for is logical levels for reaction, for a continuation, if we're still bullish or if we're still bearish. So basically, we've identified that, okay, on if we're going to be operating on an intraday level, what we're going to be looking for is logical areas for reaction, and then for the market to continue the intention, or the higher time frame intention, which is the bullishness that we see here. And it does so violently, trades into this area. That now, between here and here, we find this area to be the middle, okay, or just around here. That's the middle, or an area of uh, balance. And so price becomes, we see weak price action here, a little bit of indecision, and then boom. Not as much uh, um, velocity, but we see that movement. And then it starts to approach this area. It starts to play with this particular area that I talked about. Now we still know that we're supposed to see bullishness. We're supposed to see market bullishness. So what happens next? Price begins to trade lower, and it does so with speed. It trades lower, trades back into this area. So the question we're going to be asking ourselves is this: if we understand the intention of the marketplace, and we know that we are at a higher level of um, a longer range, which still points that price isn't anywhere near going lower. What I mean is this: we saw the move from here down here. Now, this is one half of a swing to the downside here and here. Okay. Now, that's we've got a swing. So I'm going to, yeah. So here, I'm going to change this so I can draw on the screen. I'm going to change that color to something that is. So this right here, this whole movement right here was one half of an entire swing. And then we had a return into this area for a balance, and boom, this became the second leg. Okay, so we see price trading into the higher part of that first leg, okay, and staying in there. Now, we already know that we have an intention, and the intention is we're targeting this area. So that means that we're going to continue to see higher prices. Now, when the market starts to trade lower, we start to look for a logical area for a reaction because we are still net bullish. Okay, so we start to look for a logical area for uh, for a reaction. So that's what we start to look for, a logical area for reaction. So what happens is that you look at this particular price area. Let's look at that. That here is a sell to buy candle, okay? And or you can call that an SC candle. And that would be an area of interest for balance, for us to go back and see a balance in the market. Now, what we want to see is a reaction. A reaction to that price area would give us the sign that we need, or the confirmation that we need, that we can actually continue and operate on an intraday level with this particular price area. Now, that reaction, when broken down, will give you or will show you um, a certain type of price behavior on a lower time frame. Okay, so basically, I've spent over the last 5 minutes talking about the higher time frame and where we expect to see reaction. Basically, you want to identify intention. That's points that will give you direction of the marketplace. Secondly, you want to look for a logical area for a reaction. Okay, a reaction. And when we find this reaction, we want to see two things. We either want to see an accumulation or a reaccumulation or a distribution in the marketplace, depending on the type of market intention that you have. If you have a bearish market intention, we're going to be looking for a distribution or a redistribution, as the case may be. So now, that being said, let's go to the lower time frame and let's search for this. But before going to the lower time frame, I'm going to go to the 4-hour time frame. You will see the build up, the break. I'm going to take this off now. Take the period separators. Sorry about that. All right, so you can actually see price traded above here, trades above this high, and we are approaching this target area, which is what I was talking about. and price trades lower. Now, upon trading lower, is we have this particular area, which you can call support, and we're looking for a reaction, and also we're looking for a form of accumulation around that area, and that would give us um, the confluence that we need on a lower time frame to be a buyer in that particular marketplace. Now, I'm going to break this down to a 1 hour time frame, and I just don't want to jump into the 15-minute time frame, so you can see the amount of detail that we have before we go into the 15-minute or the 5-minute time frame, and we can actually break this down further into a much lower time frame. And I want to show you this. Price trades higher, trades back into balance, trades higher, breaks this high, break a structure, and we have a high here, break the structure, returns, comes back here for rebalance or to trade back to balance, and then boom, back in here, reaction at this area. If you take this area into consideration rather, you'll find that this right here is our area of reaccumulation. Okay, and if you look at this, you have a low right here. I'm gonna increase this so you have right here a high, you have a low just resting in here. Price took that low out, and what happens, look, that area becomes a area for mitigation. Number one, it happens the first time, it comes here, and it happens the second time. That's the reaction that we're looking for, and we want to find, or we want to see a certain type of behavior. And I'm not going to go into that detail because it's a whole lot more uh, detailed. And look at that particular behavior, and here was the entry, just at the end or at the culmination of the entire accumulation right here. So now let's go back to the 15-minute time frame, and let's break this down further. On the 15-minute time frame, if you come here, I want you to look at the behavior of price. We have a previous area of support that got broken. This right here becomes your spring. Price trades higher. Okay, we want to see the last phase. Okay, I'm looking for the last phase, and I can actually break this down into a lower time frame. So basically what happens is that I get to break this down upon seeing this, and towards the end of the day, because I trade during London time, and I'm basically trading or living within the London zone or London time zone. So basically, price trades higher here. So the moment it traded higher, we are approaching the end of a particular phase of the market, and I'm able to identify that or recognize that. So basically, I can come here and put in my limit right there. The question is, why that area? It's not just because this is a last down close candle before the move up. That's not the reason. If you break this down further into the 5-minute time frame, you're going to find more logical reasons why, and you're going to find about two more entries or two more logical areas that would have been used as an entry uh, in that particular in that particular time frame. So right here, if you break this down, this was the spring, price returned in here. You could have gotten in here at the area of balance, but I'm not talking about that. And you can see price traded higher. It created a low here. That low got broken, and this became the low that took out even these lows. And then what happened? Price traded higher, took out this high, took out this high. And so there was a break of structure, price traded higher. Okay, now when this formed and price traded above this, then I started to look for a return to a particular area. Now, if you look here, uh, you're gonna find this area, price traded higher, return back into it and trade it higher. Now, you could have been able to use that area as an area of balance. Price would trade in there, but you would have been in, you'd have more. Um, drawdown. Okay, but here's another thing. I could actually break this down further into the 1 minute time frame, and then you get to see a different level, a whole different level. Now, I'm not going to do that, or okay, let's just go ahead and do that. Um, this here was a low. It got taken out, and I told you there were previous lows, and this low took it out. And over again, you see the reaction to this area. You see the reaction to that area, and price traded higher. And upon the return, you could use this candle, but it's not just, I'm not using that candle as an entry because it's just the last candle before the up move, or the last down close candle before the up move. That's not the reason why. If you break this down into a much lower time frame, you're going to see the reason why. Let's go to the 1 minute time frame, and I'm going to explain. You get to see more insight as to why that area was used. And let us maximize the screen. Now, in here, I want you to look here. Let's come here, and I want you to see price took out this low, traded higher, and it came in here. It used this area as a mitigation, okay, and traded higher, broke the high. So the next time we see price return, what do you expect? You expect price to mitigate this particular price area. It has not done that. It never did. So when it mitigates that particular area, we don't expect price to trade all the way down here, or all the way down here. So that becomes a logical area for that you can use as your stop. And let's see how many pips that would have been. I'm gonna try to do it well. That would have been a 3.7 or 3.9 pip, a 3.8 pip stop. And let's come back here and look at the trade that I took, and you can actually see that's a 3.7 pip stop price traded back there. You use that price area for or as a mitigation and traded higher. Now, as it traded higher, it created more opportunities along the way. I've been able to draw this, drag it back. And you can actually see the reaction. That was the reaction back around that area that I was looking for. And it gave me, it actually reacted and gave me the juice that I wanted to see, and price it traded higher. So basically, that's that. And that's, the logic behind that trade. First of all, you see how I actually broke it down piece by piece from a higher time frame, looking at the intention, looking for possible and logical areas of reaction, breaking it down further into the lower time frame, into the 1 minute time frame, to look for logical areas in order to get the best type of entry with very low drawdown and more traction in my trade. And so that was able to give me a 1 to 20 hour. If you look here, you have noticed that I had an extra entry. Not here. I missed an entry around this area. Okay, that was supposed to be an extra entry, but I got in here again. Price traded higher. It reacted to my entry, okay, for a mitigation at the top, and traded higher. But it took me out at break even. But the following day, we had more, reactions, because the intention was still the same, and so you would have had more success. And here I'm just gonna drop this before leaving. What we're doing is trying to pick the best entries that exposes our accounts less, or that gives you less exposure of your account size to the marketplace. And the truth is this: you could actually do a whole lot if you understand intention alone. Basically, you could actually come here and say, I understand the price is going to is still bullish. So what I'm going to do is I'm just going to look for a reaction, and the next time price gives me the slightest hint that it's going higher, I'm just going to buy, and I'm going to use a 20-30 pip stop. You could actually do this and you would always be in the money, as long as you're able to tell the the intention. But basically, why we do this is, this takes a whole lot of work, because you need to break everything down piece by piece, take note of everything that price is telling you, and work within that. Try to look at the range, try to go break it down into smaller bits, go into every time frame. There's a story there, there are more details, and there are areas that you can actually see price reacting to. And when you take these areas, you're going to get very little exposure of your portfolio or your account, and the right size of profitability, and that's really that would really help your growth or your account growth. And basically, this is what you want to do. So it takes some work, but the major part of the work is done in the higher time frame: perspective, the superior context, the intention of the marketplace. That's where the job is done. And when you're able to do that, you can actually break this down and look for logical areas where price reacts, and confluences and price areas that you can actually see the reactions that you're looking for. An accumulation, you want to be able to tell, am I going to see an accumulation, or am I going to see a distribution in the case of a bearish market condition. So basically, that's just the idea behind that trade. And I hope I've been able to answer your questions. And you can actually go to the WhatsApp. Sorry about that. You can actually go to the Telegram channel, and you can see more of these trades. I post them on a daily basis, each of my trades, and you get to see them. And so that's going to be it for today. And I'll see you some other time. And I hope this has been helpful. I'll see you within the week. So I hope you trade and be the best that you can. I'll see you later.